Hemang Jani joins us on the show. Hi, Hemang. Good morning. Always good speaking to you. Well, we've got a couple of quarterly updates that came out overnight. That's Phoenix Mills as well as Concord. Have you had a look at either of them, and what's your view on these stocks?
Yes, good morning, Nigel. I think Phoenix, the update was quite strong. I think we've seen almost about a 20% kind of a growth, in the consumption, and even the new properties, particularly the Ahmedabad Palladium, has started doing well. The hospitality portfolio anyway is doing pretty well, particularly St. Regis Mumbai and Courtyard Agra. So my sense is that the consumption, the discretionary, consumption across, the retail space, the hospitality, and even the commercial space is showing very good traction. So I think, the Phoenix Mill should do well. It's one of our preferred picks in the discretionary consumption space as well.
Okay. The other stock I wanted to ask you about was Maruti. Of course, the company has come out with an update on their ending their contract agreement with SMG, what this means for the company, etc. But now that that's out of the way, what's your view on the stock itself? They have a slew of new launches coming up. Begin FY25, they're going to start with EVs as well. At this price, is the risk reward favorable?
Very much, Sonia. I think we've seen, the SUV portfolio doing pretty well for Maruti, and now they are the market leader when it comes to compact SUVs. Also, the festive season, though it's a little bit early, but I think the numbers, particularly for the SUV and the small passenger vehicles, are showing good traction. So I think with the certain events out of the way and the fact that the company has reiterated its overall production guidance this year, which means that Maruti will be doing reasonably well this year, and it will again be one of the top pick in the auto basket.
You know, the one space which sold off very aggressively yesterday, Hemang, hi, good morning, was PSU Banks. The index itself was down 3%. What caused it? Was it a broader market thing? Was it yields being quite high as compared to pre-RBI levels? What was it? And what's the near-term forecast?
Chand, the BFSI space, the high beta space, so whenever you have, some sort of news which can have the potential to either, take up the oil price or the bond yields, which anyways are higher, that space, typically underperforms. Also, the 10-year bond yield post the RBI policy are up almost about 12 to 15 basis points. So I think there can be slightly, negative stance there from that perspective. But quarterly numbers, our sense is that will be reasonably good across the PSU and the private bank space. 20% kind of a growth in the PSU banking universe, and about 22% in the private banking space without material pressure on the NIMs, which were the highlight, like the previous quarter. So that is definitely boding well for the PSU banks.
Hemang, the big event upon us is the IT earnings, right? So you have TCS tomorrow, then through the course of the next couple of days, Infosys, HCL Tech. What's your pick of the pack now? If you wanted to buy a stock ahead of earnings, which one would it be?
Going into the earnings season with very low expectations, and the stocks also have underperformed big time. So, despite the fact that the quarter per se is going to be slightly muted, there can be some element of surprise in terms of earnings, particularly from TCS and some of the mid-cap IT names. Also, the buyback is something that the market would be, watching out for. Coming to the picks that we would like to, recommend at this point, in the large IT space, we would go with TCS. And as far as mid-cap IT is concerned, I think Cyient and LTTS, these are the two names that we like in the mid-cap IT companies.
Well, Hemang, what about the domestic themes? A couple of cement companies will start reporting in the next 7 days or so. I think on Friday we have Dalmia that comes out with their numbers. What's your view out there? Off late I've been hearing that, Nigel, watch it, in the next 6-7 months, we're going to see a lot of consolidation. And it seems there are a lot of assets that could be consolidating in there. Your view on it, would you go with the large cap or the mid cap names?
Well, combination some large caps and mid caps would make sense. I think from a re-rating or upside potential point of view, some of the mid cap companies would make more sense because there is going to be some excitement around the M&A phase which is happening. So I think JK Lakshmi would surely be one of the companies that we like. Dalmia is something that we've been liking. And within the small cap company, I think NCL is something where we think that the valuation comfort is very high, hardly about $60 per ton kind of valuation with very good earning visibility. So I think cement as a pack should do well in the current scenario.
Okay. All right. That's on the cement space, right? Any other stocks, Hemang, that you expect could perhaps be the big movers in this earnings season? We have HDFC Bank's numbers that are coming out in less than 10 days from now, and that will be the first time post the merger. So what is your thought on that? And any other large caps that you'd keep an eye out on ahead of earnings?
So clearly, HDFC Bank has been a laggard, particularly last 2-3 weeks because of the that provisioning news that came out. But I think at current price point, it looks quite reasonable. We are looking at about 16 to 18% kind of earnings growth this quarter, and a very reasonable valuations. Also, NBFC as a space should do well. So Poonawalla FinCorp, Mahindra Finance, these are the two names that we like within the NBFCs. Also, some of the real estate companies, Godrej Property in particular is something that we've been liking, given the kind of traction that we are seeing on the new project announcements and the sales growth both.
Okay, no, point taken. Just a quick word, Hemang. The big story, unarguably, I think this morning is the very sharp drop, from a global perspective, is the very sharp drop in US bond yields. They were not trading last night, but from Friday's close, as we were making the point earlier, yields are seen opening some 16 basis points lower. The question, though, is it positive or negative? Yields, it's because, what is the reason for this to go down? Is it a risk-off signal because of, the war, etc., uncertainty, etc., ahead? And this, by the way, would be consistent with the 20 basis point fall that we've seen in US yields in the last two episodes when the conflict came through. But back then, US equities also sold off 5%. So I'm just kind of, you can look at this and say, well, sharp drop in yields, great for tech stocks, growth stocks. But is it as simple? Is it as straightforward? Your sense?
Looking at certain global macro data points and relating it with market movement is going to be a bit tricky. Just to give you an anecdote, on Friday they came out with job report and the job data was far better than market expectations. So the logical expectation was that the market would react negatively because there would be higher probability of rate hike. But the market chose to react other way. So similarly, large part of this higher bond yield is now pretty much known, and people are waiting out for some additional triggers, be it in terms of inflation or some, indication from Fed as to when these rates will peak out. So I think the market will have its own kind of way to react to it. I think the earnings season in US and India will play a far important role rather than, some of the macro data points, which will be far more, volatile in the nature of the market that we are living in.
Okay. All right. I wanted your thoughts also on, we were talking about, all right, let me just get to the pre-opening rates actually. The pre-opening rates are kicking in. So let me just try and get some rates in. Okay, in just a minute from now, we'll get those rates on board. But any other thoughts, on a couple of these names in the banking space? What is your top pick now that you're looking at in banking, both from the large and the mid caps? Because this time, as far as business updates are concerned, there was some strong traction that came through, even from the PSU banks.
Yeah, so PSU banks actually have underperformed in the past few trading sessions, maybe because of the bond yields going up. But I think from a quarterly results point of view, BOB, Canara Bank, these two names should deliver reasonably good, about 18 to 20% kind of a growth. SBI also, I think after last quarter, the NIMs are not looking that great. I think this quarter, there should be some stability in the NIMs, and we are seeing a good amount of, interest coming back into SBI. So I think PSU banking space purely from a results perspective is looking set for a maybe 8-10% kind of an uptick.